What's up, everybody? Welcome to the November 24th, 2025 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by Indy Wealth. Today, we're going to get right into the hot button issues for the week, so let's get going. Let's start with last week and some of the results of earnings and just the things that came out. Let's start with first, I kind of titled it AIS Consumer Not Really. So Nvidia reported last week, and I think the numbers were fine. There wasn't anything really that would suggest that we're in any way, shape, or form collapsing from a structure of AI infrastructure deployment. In fact, I would say that it's continuing to grow very robustly. Are we accelerating? I don't know. I don't know if we're at an acceleration level, but we're certainly at a level that's still well above anything else that's happening out there right now. And Nvidia is still saying that, Blackwell chips are very difficult to come across because they're so in demand and they're running out, and they're still doing massive growth. So I don't think that there's a lot to be concerned by there right now. I've talked many times before about at some point we're going to see that the overbuild will happen. I don't know when this is, but I'm pretty certain on this is that, these companies, these technological growth profiles tend to be highly in demand, and we think they go on forever, and then they eventually do not. There doesn't seem to be any evidence of it happening right now, but at some point down the road that will. But until we get some clarity that that's actually happening, or some level of data that shows that this is starting to turn over, that people are doing overbuilds, and maybe, economic weakness, what could cause it is a multitude of things. But there aren't any signals of that yet. So that's why I'm saying kind of AIS at this point. On the other side, there is pretty strong evidence that the consumer is starting to pull back. A couple of things that I pay attention to, and I wrote a piece on this last week, is the consumer finally saying uncle, is what I entitled it, because we've got a couple of data points. One is consumer sentiment. Consumer sentiment is near 25-year lows right now. So consumer sentiment is in the toilet, for lack of a better term right now. Again, I always take that with a grain or potentially even a block of salt, because I always say follow what the consumer is doing, not what they're saying, because a lot of times they can say things are horrible, but they're still out spending money. So the other side of this, where the consumer is doing, is we had a lot of consumer-based earnings reports here lately. And we have enough evidence from the restaurant companies, from the hotel companies, from the leisure companies, from the retailers, that suggests that overall spending is starting to be challenged on that mid-tier to down on the income threshold. I've been talking about this a lot. It's been referred to as the K-shaped economy. I know people are getting sick of that data, and especially that saying. But the mid to lower tier consumer is really starting to feel the effects of the things that have happened from job sentiment, which is very, very important to just the overall economy, but also to that mid to lower tier consumer. And also feeling the strain of still we're at 3% inflation. So we have not corrected inflation. Prices have not gotten cheaper, right? And they rarely do. You start to see deals where they'll do value discounts and all that stuff, but inflation tends to be increasing. Now, it's not increasing at an alarming rate, but it is still above that targeted 2% level, at probably closer to 3%. So those effects are being felt among that mid-tier to lower income consumer. And we're seeing it through the earnings reports. A lot of challenged earnings, a lot of restatements and lowering. We saw Home Depot bring numbers down again. Lowe's actually did bring numbers down. They beat expectations, but they brought numbers down. So consumer housing and those kinds of things are starting to see a little pullback. Chipotle has had a difficult run here for a little while now. But there are showing that, the consumer is just getting a little stretched. The other ones who are doing well tend to be the value oriented. So Walmart reported very good numbers, and they said their earnings are expected to grow again in the fourth quarter. They actually brought numbers up a little bit. So they're seeing good data out there, but they've even talked about the challenged consumer as that value shift, right? You're seeing some people doing more value shopping, and value has been associated with Walmart for a very long period of time. Target had a very difficult quarter, while Walmart had a quite a strong one. The other one is TJ Maxx, and that one was pretty good as well. And again, the value-oriented shopping consumer. So you're seeing the effect of maybe pulling back a little bit, but also looking for value-based deals. And that's why I think the restaurants, you've seen more value-oriented meals and those kinds of things come out recently. So we are seeing cracks in the consumer. AI from a deployment perspective, the piece I wrote about saying Uncle was talking about the weakness of the consumer, but it also talked about how the S&P doesn't feel that as much because direct consumer companies are probably about 10% or maybe even a little under 10% of the index, while these AI oriented companies, your massive companies, your Nvidias, your Apples, your Microsofts, and others, are almost 40% or at least 35% of the index. So much more, the S&P 500 right now is much more weighted towards AI than it is the consumer. But it doesn't mean we could continue to have a weak consumer, because I still believe that's what drives our economy over a longer period of time. Two, turning to government data, we're starting to get some back. The government is reopened, so we're starting to get some government data back. I am taking a little bit of a pause on putting massive amounts of real sentiment and thought around government data right now, just because it's a little muddy. It's delayed, it's different, we were out for the longest shutdown in history, so it has some impact on the data that they report. So it'll get more clear over a longer period of time. But right now, I would say that anything you read and anything you're seeing on one data point, honestly, I'm always cautious about one data point. But especially right now, as we start to come back, there just could be some muddy data points, and you kind of got to take that, look at the trend, look at the changes, see if anything's sustainable. I think the biggest sustained trend right now is that there is evidence that the job market is weakening. Could that change over? Absolutely. But you are seeing more slack. JP Morgan wrote a piece on this morning and saying, there's more slack out there and that we have to be at least aware of a weakening job market and what the impacts could be. Turning to number three, S&P 500 revenue growth. Here's again what I was talking about from number one is if you heard number one and consumer sentiment being weak and all that stuff, you would think revenue growth in the S&P 500 would be struggling. It is not. If it holds, we're still not quite through earnings yet, but we're getting pretty close to the end. According to FactSet last week, we have, based upon this quarter's revenue growth, is 8.4%. That's the highest since 2022. If that holds. And there's really not a ton of companies left that could dramatically swing that. But it looks like we're having a pretty robust revenue growth quarter for the S&P 500. And again, what does that derive from? It derives from the fact that we're much more concentrated in AI-oriented companies in the S&P 500. When you invest in the S&P 500, 35% of your money is going towards AI-related companies. Less than 10% is going to those consumer companies at this point right now. So again, it is always a broad swath. 500 companies in there. But just that concentration level is really changing the course of what is actually driving that index's performance and that, the revenue growth from those kinds of things. Because AI-oriented companies, your Apples, Microsofts, your Nvidias, they're growing very fast. And so being more wedded towards those companies is creating that accelerated revenue growth. Now, estimates for the remainder of the year, and actually the next 5 quarters, is for decelerating revenue growth. That's what you're saying as the consensus right now, as we've kind of hit maybe potential short-term peak in revenue growth. That's a little bit of a headwind for the markets, but again, it's an estimate. We don't know if that's exactly right. If AI deployment continues at the pace that Nvidia and AMD have suggested it will be, it's going to be tough to really, massively decelerate. I think you could decelerate. This is highest growth since 2022, but it's going to be tough to really go into very negative territory if AI deployment is as aggressive as being suggested right now. Could that change? Absolutely. So that's one of the things we're paying attention to. But it was interesting to me to see that FactSet said we've had, basically the highest in 3 years revenue growth in a time where we're hearing a lot of consumer-based companies and saying that things are getting a little struggling out there. Turning to point 4, Turkey and Thanksgiving. So we have Thanksgiving coming up on Thursday, a little bit of a shortened week. I hope everybody has a good Thanksgiving. I just have a quick thing. I tend to do, so last few years, I have not made turkey for Thanksgiving. I have switched to beer can chickens. I enjoy the meat of chicken much more than I do turkey. But I think I've come to a different conclusion this year. I am going to make turkey, but I'm making nothing but dark meat across the board. So I'm making turkey and chicken, but I'm going to make all dark meat because I think I am just not a white meat fan. I think that's where I'm at right now. I don't think it was the turkey. I thought it was the turkey's problem. I think it's my problem. I think it is that white meat just isn't that great to me. I don't find it very flavorful. And I've struggled with trying to make it more flavorful. You can certainly make the skin more flavorful, but the meat itself, as long as it's juicy, it's fine. But I don't think it's very tasty. But I do find dark meat very tasty. So we're going to be savages this year in the Bryan household for Thanksgiving, and we're going to have turkey drumsticks. So everybody's getting a drumstick at my table, and everybody's getting chicken thighs if they don't want to be a savage and rip off the drumstick. So we're going to give it a little bit of a shot. We're going to see how it goes. But I think in general, I'm going to lean much more towards dark meat than white meat going forward. With that said, still love Thanksgiving. I think the adage of Thanksgiving is for the sides is absolutely true because the sides are phenomenal. So that's what I always look to enjoy for Thanksgiving, and then hanging out with the family and enjoying that as well. So I hope both you all have great sides and a great Thanksgiving as we come to Thursday this week. That's all I have for this week. Tune in next week where you'll see the next hot button topics. Until then, thank you very much and take care.